Hi, I'm Martin McGrath from Financial Edge Group, and I want to talk to you about how to get control over your tax in these next 12 months. It's July, now's the perfect time to make some plans about what's happening in the year ahead. What we do at Financial Edge Group is specialise in retirement planning. I've got 2 degrees, one in tax, one in financial planning, so I understand the tax stuff. So I want to give you my tips to get this best result from a tax perspective for you for these next 12 months. And what that looks like is a few of these following things. One is deductions. You might be working, spending money in relation to work. So know what deductions you can claim. It might be what you claimed last year, but also there might be just stuff that you've missed that you didn't know about. So speak to an accountant, do some research, do some Googling, find out what's relevant to your occupation so you know your deductions that you can claim. Once you know that, you'll start thinking about it. And importantly, the most important next step is start tracking that stuff. You might be spending money at the moment, but you're just not tracking. So when it comes to tax time, you missed it. So it might be a chance you can go catch up for last year on some of that stuff, but even more importantly, this next 12 months, now's the perfect time to track it. It's easy to track it when you spend it. And there's a few different ways to do that. There's some certain apps you can get to track those expenses, but it might just be if you only get a receipt or an invoice sent to you, put it in an email folder. Call it tax next year, tax this year. Folder everything in there, and therefore come to tax time, you'll have it all there. If it's a receipt you paid, take a photo of it and put it in that same spot. That way you'll understand when you come to the end of the year, you'll understand exactly everything you've spent, make it super easy to get your tax return and get the best result for you. Importantly also, make sure you consider other things you can do to improve your tax result. And those 2 key things is efficient investing. So what I mean by that is often people might be buying assets or holding savings in the wrong person's name. So you might be a husband or wife, they might have $10,000 or $20,000 in savings and they're earning some interest, and they might own it 50-50 or own it in the husband's name or whatever, or the wife's name. You want to hold it in the person's name who's got the lowest tax rate, because you might earn $1,000 in interest on that. Whoever owns that bank account has to pay tax on it. So if one person's paying tax at 40%, you'll pay $400 tax on that. If the partner's not working on a lower income rate, they might only be paying tax at 20%. So it's a $200 tax saving just by having it in the other person's name. It's as simple as making sure the account is on that person's name. If not, set up a new one, transfer the money across, and automatically you've saved tax on that. So there's some efficient investing about where we hold that. Also, the other part of that is consider super as part of your tax strategy. So there's different tax incentives that come to super, things called a co-contribution, a spouse contribution, or some salary sacrifice, or personal concessional contributions. I know that all sounds like jargon. Have a quick Google research, check out some of my videos because I explain all those things. You can do 1 or 2 of those things, you can get some massive tax savings. Anywhere from 15% to 50% back on the money you've used towards those things. So that means if you do some salary sacrifice of $1,000, that might save you $300 in tax. Big saving. Might be if your partner's not working, you can do what's called a spouse contribution for them, and that can save you $540 on your tax return in the year you do it. Boost their super, saves your tax. So use super as part of that to find some other ways to help save you on tax. Hopefully that helps. If you've got any questions, feel free to reach out, and hopefully you have a great tax result at the end of this year.